Hello guys, and welcome back to another video by Vertex Investing. Tans here. Now what I'm going to talk about, as you've seen from the title, is trade management. So if you haven't learned already from the previous videos, starting from the webinar to the I think 3 breakdowns now, you would have seen the how to actually trade using the order block strategy. And if you joined our Telegram group last night, I actually sent out a PDF where it's a step-by-step process on how to trade using the free strategy. However, it's all fun and games, and being able to enter the trade is fair enough. But if you don't know how to manage it, then there's no point learning it, right? So I'm going to show you how to actually manage the trade, and like, for example, when to move your stop loss to break even, because as you know, we trade a rule-based method, and everything we do is rule-based. And what that does is it takes away the confusion that comes with trading, because with the standard technical analysis, there's a lot of guesswork involved. Whereas if you have set rules, although it does have its downsides, which I'll go into, it helps take away the emotion that comes with trading. But let's get into it. So let me draw something out. Now, if you haven't noticed already, I don't pre-plan these videos, which is why I may stutter a fair bit, because I'm freestyling for you guys. So I apologize for that. But I hope you guys are taking the value from this. Well, to be fair, I've received a lot of messages, with some of you taking trades. Some of you even printed out the PDF, and some of the effort that I've seen from you guys is amazing. Really good to see. Okay, so let's look at this trade, for example. So what we can see is we've just broken structure, okay, and say there's an OB here, okay, and that's where you've entered. Perfect. Okay, perfect entry. It's not always as clean as this, but it's a perfect entry. Now, when do you move your stop loss to break even, and when do you take partials, and how to trade your stop loss? So the first thing you have to know is when you break the next structure, which is this point here, this is when you should move your stop loss to break even. Now, the reason being is, say for example, okay, say we break this structure. Now, if trend was to continue bearish, right, we shouldn't expect price to break this high. If price breaks that high, and that means we're expecting a continuation to the uptrend, and this was just a fake out, right? That's what we would expect. However, obviously, if this happens and we're in this trade here, we're going to be hitting our stop loss. But the reason why we'll move our stop loss to entry as soon as it breaks this structure is because we're not expecting it to go up there. If it does go up there, then it means we've entered wrong and our OB was wrong. Right, and whatever time frame you do this on is completely up to you. I personally do it on the 1 minute time frame. As soon as we break structure, that's when I move my stop loss to break even. Now, in terms of taking partials, so say for example, for me personally, if the move from here to here was at least 10R, I would take away partial. So I would close 5R and then hold the rest of my risk. So I use 2% risk. So at this point, I will close my 1% risk, and then I'll have the remainder 1% for the rest of the trade that will carry on, right? And that's how I do it. If it's less than 10R, I don't do anything apart from move my stop loss to break even. Okay. However, sometimes you get these really annoying moments where you get this. Sometimes you get this where price would come and then carry on. Okay, actually that's a very bad drawing. Let me draw that again. So sometimes you'll get this. Okay, now the reason that this would happen, so in terms of so you move your stop loss to break even here, okay, because you've just broken structure and it's it's a valid entry. Okay, perfect. But you have to bear in mind, when you break this structure, there's an OB here that needs to be mitigated, right? So that's why price has to come, mitigate that, and then drop, right? Sometimes this OB is right by where your entry was, and if that's the case, you may get taken out of break even if you move your stop loss to break even here. So how to avoid this is, say for example, let me get rid of some of my drawings. Say for example, so I've entered this trade, my entry is here, okay, my stop loss is there, and I've just moved to break even here, okay, and I've used 2% risk, okay. What you can do here, once price comes here, you can close, say for example price is running at let's just say 6%, for example, okay, price is running at 6% here, okay. What you can do, you can close 2% of your risk, so you close 2% and you're left with 4% in terms of profit, but don't move your stop loss to break even, okay. Move your stop loss to break even after this OB has been mitigated and then break structure again. Then move your stop loss to break even, and then it has no real reason to go back up. That's a safer way to do it. And the reason why we're closing 2% is because 2% is my risk, so I close my risk, okay, I don't move my stop loss. So if price does come and hit my stop loss on this move and then drops, I'm at break even. So essentially it's a break-even trade, but it allows it a bit more room to maneuver. So that's one thing to pay attention to. And what I advise is taking notes from these videos and watching it over and over just to understand what I've just said. So whatever your risk is, so say if you're using 1% risk, close out 1% risk here. Okay, if you feel you got an OB that needs to be mitigated here, but is quite close to your entry, just take off your risk. So close 1% risk here, for example. So say you're using 1%, close out 1% risk and let the rest do what it needs to do. Don't move your stop loss. But most of the time, you can move your stop loss to entry at this point, and price will generally react at an OB, and you should have enough room to carry on at this point. So that's when to move your stop loss to break even and when to take partials. Now, in terms of taking partials further on, so say for example your TP would be like, say it'll be a 4-hour low. So say that's the 4-hour low here. Just say that you've got structures that you're breaking along the way. You can take partials at any of these structures. How you do that is completely independent to you, right? You don't need to do what we do. I don't take any further partials along unless it's a major structure. Say for example, I'm doing it on the 4-hour time frame, right? And we've got my target is the 4-hour low, most recent low, and then we've got a significant hourly low here. I'll probably take partials around here and then can hold the rest, because sometimes you need to remember, although the strategy is set and we know that we have a really good edge, you do need to pay yourself, because it doesn't always play out. Sometimes you'll get a good reaction. Sometimes you'll get a good reaction here, it'll come and then carry on going up, right? So, and then that drop could have been at least like 20%, and then price can just carry on going. And imagine if you're not comfortable taking break evens, then what I suggest doing is closing some of your risk. Closing some of your risk at this point, taking off partials, paying yourself, and then holding the rest. And what this does is, when you're holding, say when you take partials and paid yourself, when you're holding the rest, it takes away the emotion that comes with trading. You won't be frustrated about, a trade hitting you a break even, because you won't be, because you've closed partials and you've secured some profit. You've paid yourself. You've got nothing to be concerned about at this point, right? Now let me get rid of all of this. I'm sure there's a quicker way to do this. I'm pretty sure there is. If any of you know, feel free to comment in the comment section below. So let me show you in this example here. I'm pretty sure there was an example here. Okay, so this is GBP USD. Now I've done the breakdown for this trade before, so I'm not going to go into how to actually trade this, but what we can see is, obviously we have a very clear OB sitting here, and obviously when I cover the wick, let's refine this. I believe there was a 5-minute oh gosh, what have I done? What have I done? Oh wait, oh, I know what I did. There we go. There we go. Okay, apologies, apologies. I don't know what I did there. I think I went to 5 months without realizing. So what we can see here is that is our OB, and that's a perfectly fine OB. It's about a 5 pip stop, right? That's fine. So let's go. Let's play this out. When it gets there, I'll show you what to do. So at this point we've set our order. Let me just set the order just so you guys can see it visually. So I don't know when about it triggers, but say our stop loss is going to be, I think it was a 5 pip stop, something like that. Your entry point is here, just in line. So yeah, that's fine. But yeah, the full breakdown I have already done for you guys. Let this trade play out. Oh, you know what? There's a quicker way to do this. I'll just go to the hourly. Okay, I done it right this time. So let's just let this play out. I think it's further along the line that he gets there in the end. There we go. Okay, so price has just got to and triggered our OB. Okay, let's go back to the 5 minute and let me show you. So we've just triggered, and obviously it's not set as accurately as I possibly want it, but I just want to show you what to do. So we're looking at the 5 minute time frame. Now that's perfectly fine to work off, and a lot of people are comfortable using this time frame. Now when to move your stop loss to break even. So what we can see is we've obviously created this high, it triggered, and then it came down and broke this structure. We're going to move our stop loss to break even, and if I just see, let's see what. So the risk to reward would have been 6. So say if you're using 1%, you'll be running at 6. About 6%. And what you can do is close 3% here, move your stop loss to break even, and then hold the rest. Now the reason why this is a good situation to move your stop loss to break even. Let me get rid of the drawings again. The reason why is because the OB that broke the structure is here, and that's a clean OB, so it's got no need to go all the way up here. Okay, so I can move my stop loss to break even and not really worry about it, but you can take partials at this point. Okay, now in terms of trailing your stop loss, if you want to trail aggressively, you want to trail along each high after every pullback. Why? It's because it will make sense now. It's because when you get a pullback and it drops, you're breaking structure and leaving behind an OB, which it reacts to here. Then you break structure again, which breaks it here, and you're left with an OB here. Price didn't overly come to, but it's fine because it came back, broke structure here. So you can put your stop loss above here and you'll be closing the trade here. Okay, and if you do close the trade, well, if it hits your stop profit, you'll be closing 12%, and that's solid on that trade, right? 12% is great. However, that is a more aggressive style, and if you are going to use an aggressive style, I suggest doing it if it's a counter trend. Oh god, I suggest doing it if it's a counter trend trade. That's a tongue twister there. Apologies. All right, and if, for example, say if you're running pro trend, so this trade is counter trend anyway, but if you're running pro trend, I'll show you what to do. So the best way to do it is doing it on a higher time frame. So say if you go back to the hourly, which is a very good time frame to trail your stop loss, is, for example, so you already move your stop loss to break even on a lower time frame, because you have to remember price is fractal. So say if this is happening on a lower time frame, say if this shift in market structure is on the 1 minute, okay, the hourly will do the same thing but further on. So the hourly could be doing the same exact thing but pull back and go. So you just broke structure, can't react to an OB, and carries on. So us having a minute time frame entry allows us to catch it at the wick before anyone else has actually entered the market, right? That's how retail traders would enter. So they would enter on a break and a retest. They will enter here, and most likely they're going to come back, get taken out, and then carry on. Whereas we are in the trade because we've entered on a lower time frame. As you see, we've entered on this wick, okay? Whereas Retail traders will be entering, let me have a look again. Don't quote me on how to draw trend lines. Actually, you know, that's a very bad trend line. Let's just draw it from here, okay? And say they just broke a trend line, so retail traders will be looking to, we got a break, retest, and drop, right? But it doesn't work like that. How is that? It doesn't work. Okay, that's probably a fib retrace as well. I don't really know, but I'm not going to look into that either. But what I'm going to go into is how you can trail conservatively on the higher time frame. So we already have the 4-hour low, which is here, and that is our target. Okay, and we're currently running risk free, and we've just closed out partial. So we closed out 3R at the top, and we're running at 12% currently, and you know, we're at break even. We've got nothing to worry about. We can just, whatever happens. Now, if you want to manage the trade, so say for example, if you want to take it as a swing, if this was pro trend, a good idea is using the hourly time frame. Wait for a break of structure. So we broke structure here, right, and the high is here. So you're going to put your stop loss here. Break structure again. So it's here. We broke structure, and then you wouldn't really do anything at this point because stop loss is fine. Then it pulls back, breaks structure again, and you put your stop loss here. We've just broken structure again here, and our stop loss is going to be fine here, and we're going to wait for the next structure break, and we would have been taken out at this point with this. That's a huge gap. We're going to be taken out at this point, right? But if you did it that way, the difference is actually, well, if you set a TP, you would have hit TP. If you didn't, you would have been stopped out at 24R, which is solid. And bear in mind, if you close half, you'll be closing 12% at this point with the 3% that you've already closed, right? So that's trade management. So just to recap, let me draw it out. So just to recap is, let me just get rid of remove all drawings. Let me show you. So just to recap is, right, so firstly you have your entry, okay, you break structure, stop loss is going to be break even, okay, SL is going to be at entry, and then you're going to carry on. Okay, if you want to, you can take partials here, okay, so I'm going to write P1, and you can take partials at any structure point that you wish, okay, towards your target. That's up to you. Remember, pay yourself first. Now, if you're in a situation where you get a structure break, but you have an OB that's right at the top, you're better off closing your risk, whatever that is, at the structure break. Don't move your stop loss to break even and then carry on. Okay, you're going to close off, say you use 2%. Okay, I'm going to use 1% because that's what a lot of people do. So say you use 1% risk, you close 1% here. Don't move your stop loss, leave it where it is, because if it hits stop loss, you are break even. You broke even the trade. It's fine, okay, but it gives it a bit more room to maneuver. Bear in mind, we're using a 5 pip stop, so there's not a lot of room anyway. So given that space is enough. It just needs to trigger at this OB. If price breaks that high, then obviously we've got the OB wrong, most likely, and price is going to continue going up. Okay, so that's what you do in that situation. In terms of trailing, if you want to trail aggressively, say this is the 1 minute, use every high that's being created, and be aware of the OBs, whether they've been mitigated or not. Say for example, we've broken this structure and we've got an OB here, right, and it's not been mitigated, but then we break structure again here. Leave your stop loss here because this OB needs to be mitigated. But if you get another break of structure, then move your stop loss to the next high, okay? And if you want to trade conservatively, use the hourly time frame. Now, I hope you've enjoyed this video and hope this has helped clear a lot of the things up. Now, if you haven't joined the free Telegram, make sure you do, so you can get access to the PDF and any of the free updates that we give. Make sure you subscribe to our channel, because I'll be producing a lot more videos regarding the OB strategy and how you guys can use it more effectively for free. And if you want to take your trading to another level, obviously drop us an email, visit our website, feel free to join us. It's completely up to you, but what you have here is everything you need to be a successful trader. And also be sure to sign up to our website, where we give out regular promo codes as well. And obviously we still have spaces for our bootcamp, and the discount code bootcamp1 is still valid, where you can get £500 off our first bootcamp. It's our very first bootcamp that we're running for 2021, and we're going to be running it every single month. Every single month for 2 days. And if you want to know a bit more about that, be sure to go back and watch the webinar, and I'll link that onto this video as well. But for now, stay safe, and I hope you carry on trading safe, and I hope you enjoy this video.